Hello and welcome to ProTrader Strategies Market Commentary for Tuesday, May the 24th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, other than we did get the Richmond Fed manufacturing survey or index. Came in at -1, was expected a positive 0.9. Now that's the first time we've seen a negative reading in this manufacturing number since February. And one caveat to that that's interesting is it's really mirroring those PMI numbers, the Purchasing Managers Index that we saw earlier on yesterday. So a lot of these manufacturing numbers are probably going to start to look a little bit lackadaisical at best. On to crude oil. Crude oil continues to rally, up 50 cents right now. Still below that line in the sand I've talked about of $50 a barrel. If we get above $50 a barrel, it could easily want to trade up to that 60, despite the fact that this was something I tweeted out earlier today, and it was something that Morgan Stanley noticed as strange things taking place out in the waters. These little red dots are all oil tankers floating around, bobbing around in the sea. So up 9%, global super tanker fleet currently storage duty. So that's what I've talked about. There's just basically no storage on land right now, and basically all of these oil tankers are out there just kind of floating around trying to find a port to go to offload some of their crude oil. So that's up 40% since December. So there is a glut of oil out there, which is just really driving me nuts, if you will, that we can continue to rally and see this upward momentum with crude oil, despite the fact that there's so much oil out there that they're basically having to store it in oil tankers or super tankers. Anyway, moving on, and the strength of the dollar would push that a little bit further down as well. On to the equities. The equities are just screaming higher for the most part today. As you can see here, NASDAQ up 84 points on the day. With the theory of this market profile, now that we've bounced off of this point of control, and as further we move away from it, it looks like it really is going to want to come up here and trade to this 45.15-ish area, if you will. And then we could see some consolidation back and forth right here at where we're at now, fill in this and make a nice big bell curve. So I don't really see us going and testing new highs, but the more Trump seems to gain momentum, the more the market seems to like it. On to the E-mini S&Ps /ES. The E-mini S&Ps rallied just about as hard, up over 1% right now, up 27 points on the day, and rallied straight to the point of control, which is where the most volume has been spent. That is the comfort zone, if you will, for the many S&Ps and a magnet. I've talked about that several times, how the point of control acts as a magnet, because that's where price has been discovered and accepted. So that's where the most people have traded back and forth. Now, an interesting thing of note, the E-mini S&Ps, if we look at the daily chart on a 15-minute bar, basically overnight just started rallying off the lows, and as soon as the day session opened up, there was almost an hour and a half of no pullback, just basically straight up. Now that we've reached that magnet or that point of control in the E-mini S&Ps, that's where we're starting to see a little bit of profit taking from the rally, and we're probably seeing a lot of people that were long for some time or even short for some time starting to get out right there as we see that bit of a pullback. So there's a lot of trade going on right now, right there at that point of control. Onto the trade that I've done. I've only done one thing. I didn't actually go and do the earnings trade for Best Buy, but it did go and did not really trade outside of what the market maker move was. A bit surprising that they were to the downside, that they did beat earnings, but their forecasts were not looking very good. To Under Armour. This is the trade that I covered, and I have not had this on for a really long time, but we did see some volatility contraction. As the market rallies, we're going to see a lot of vol contraction happen in a lot of these underlyings, other than maybe the commodities of like gold and things of that nature. Gold is going to see volatility contraction on the way back down, which we're seeing in gold today, down 20 points earlier today at least. And with Under Armour, took advantage of this vol contraction and had on the June 35.45 strangle, and that is basically selling a 35 put and a 35 call to create that strangle. I originally sold it for 85 cents, was able to cover it this morning for 40 cents, so right there in line with my 50% of max profit on that particular trade. So that one ended up working out pretty good. A lot of the other ones I'm just kind of sitting on waiting and see. GoPro's finally starting to work out. Twitter not so much, but my GDX trade that I did yesterday is working out nicely because gold is down. Directionally wrong, but that's the beauty in that front ratio spread. So that's about all I got for you guys today. Friday's webinar is going to be on the called diagonals, so check that out. That should be a really good one. Low implied volatility strategy that we can implement in our portfolios and hopefully take advantage of some directionality. All right, that's all I got for you guys today, other than if you can't take that, take it easy.